Good afternoon, Holly Shields here, live from Kalkine Studios in Sydney, and you're watching the early trades. Let's get started with the market open report. Australian shares are trading lower at the open, extending the heavy sell-off on Friday amid fears the new Omicron COVID-19 variant could derail global economic recovery. The S&P ASX 200 index was down 77.6 points, or 1.1% inside the opening minutes of trading. Travel stocks led the declines, with Flight Centre down 9.4%, Webjet trading at 7.9% lower, and Qantas down 6%. Then energy stocks were also heavy, Woodside Petroleum down 5.5%, and Whitehaven Coal down 5.3%. Then the major banks weren't helping. Combank was down 1.2%, ANZ trading 1.3% lower, and NAB fell 1.5%, while Westpac lost 1.9%. Then the healthcare stocks were doing well, however, Sonic Healthcare was up 2.9%, Helios was trading at 2.7% higher, and Ansell had firmed up 2%. The S&P ASX 200 slid 128 points, or 1.73% on Friday, to hit a two-week closing low. Heavy falls in Europe and the US followed investors sold first, save the questions for later. Currency and equity futures markets seemed calmer this morning as the Australian dollar bounced 0.27% to 71.39 US cents. The Aussie is a classic commodity currency reflective of confidence in the global economic demand. Buying this morning suggests traders are less concerned about the economic hit from Omicron. That said, the short-term pain still seems to be likely this week, as scientists have a better sense of the scale of the threat. Equity markets looked fully valued last week and therefore vulnerable to a decent correction. Whether the downturn is sustained depends on the severity of the threat and how governments react. Renewed two lockdowns and travel bans will mean longer-term pain. Then in the US, vaccine makers and stay-at-home stocks surged. Moderna jumped 20.57%, Pfizer 6.11%, Zoom 5.72%, and Netflix 1.12%. Then defensive healthcare and consumer staples fell less than these cyclical sectors. Here, biotechs and the small pool of domestic stay-at-home winners look like the prospects in the near term. And turning to the week ahead, domestic economic data is unlikely to have much of an impact, while the global factors dictate market direction. Highlights this week include building approvals, private sector credit data on Tuesday, quarterly GDP on Wednesday, and trade and retail figures on Thursday. AGM season is in its twilight. There are meetings today for shareholders in Lynas Rare Earths, Mesoblast, and Pact Group. Then tomorrow we have Oracobra, Star Pharma, Omni Bridgeway, and on Wednesday, Synlait Milk and Premier Investments on Thursday. On the IPO front, set to list today according to the ASX and three companies. Alogio Group is a provider of short-term rental accommodation in Australia and has a current portfolio of over 879 holiday properties and 13 mid-market hotels. The company raised $16.5 million at 20 cents a share. Then Andean Mining, a mining explorer, raised $6 million at 20 cents. Last, Parabellum Resources, a mining explorer that has raised $5 million at 20 cents a share. The rest of the week we'll have Cosmos Exploration on Wednesday, Closed Loop on Thursday, and Orange Minerals on the 8th of Friday. Now, before we move on to the newsmakers, let's take a short break.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google, to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV.
Welcome back to the early trades. Moving on now to some concerning news coming in. The Omicron variant is casting a pall over financial markets. It poses an immediate and downside risk to consensus expectations for growth, inflation, and earnings. The variant also represents a challenge to the market microstructure, as liquidity conditions are impaired in some sectors, and this will only worsen over the next few weeks. Although bear in mind the starting point, S&P 500, made new highs early last week and has more than doubled from the pandemic lows. Markets were gaining confidence in the Federal Reserve accelerating its taper schedule and lifting rates by the second quarter this year. The energy complex has been rammed to the COP26 session in Glasgow, underpinning the global inflation narrative, yet leaving oil susceptible to the 6 standard deviation wipeout that occurred on Friday. Now suddenly we have a raft of new questions to answer, most of which can only be addressed partially at this point. Now for a look at the ASX listed companies that are trending today. Well, Cenex Energy has agreed to grant POSCO International a 2-week extension to its exclusivity period as the companies work towards a takeover deal. POSCO has requested the extension to provide additional time for the receipt of necessary internal and board approvals. Cenex noted there was no certainty that the discussions with POSCO International will result in any binding agreement or transaction. Then, Finbar Group, the property developer, has won approval for its proposed Garden Towers joint venture apartment development on the eastern edge of Perth CBD. Garden Towers will be a $207 million single-stage project comprising 331 apartments plus ground floor commercial tenancies. The utilities-focused tech company like GPS reported 40% revenue growth and 135% growth of new contracts won during the half against the prior year's corresponding period. The IKE platform allows electric utilities and communications companies to increase speed and safety for the maintenance of distribution assets. Meanwhile, Deadnought Resources has identified the carbonate intrusions at the Mangaroon project in the Gascoyne region of WA. The company's recent magnetic survey identified multiple ovoid magnetic anomalies located just south of Lyons River Fault, which included outcropping carbonates within 2 of the intrusions. If mineralized, the company said the carbonate intrusions have the potential for large-scale rare earth element mineralization. Then, Vulcan Energy has signed a binding agreement to supply lithium hydroxide to Stellantis NV commencing in 2026. The offtake agreement will see Vulcan supply a minimum of 181,000 tonnes of battery-grade lithium hydroxide over the duration of the 5-year agreement. The agreement is capped at 99,000 tonnes and will be used to supply Stellantis with a sustainable supply of lithium. The battery-grade material will be used by 3 Stellantis battery production facilities in Europe to produce at least 120 gigawatts of the cell capacity by the year 2030. Well, that's all for now on the early trains, but stay tuned because we have many more shows lined up for you on Kalkine TV. Holly Shields signing off.